Good morning, everyone. Welcome to the launch of the 30th Annual Kent Property Market Report. I'm Ron Rosa, Chairman of Caxtons, co-authors and producers of the report, and I'm your host for this morning. The report is a unique collaborative publication which is replicated nowhere else in the UK. It's written and produced by a partnership of Kent County Council, their Economic Development Division, Locating Kent, and Caxtons, supported by locally based specialist firms and endorsed by the RICS. Well, after a lot of thought, we reluctantly decided upon using the webinar format again this year, as cases of COVID-19 have been rising pretty rapidly in Kent. And I hope that you'll agree that in the end, it was the right call. Well, you've certainly signed up in very impressive numbers. We've got a fantastic 321 people registered, even though you've got to cook your own breakfast again this year. We're grateful to Kent Invicta Chamber for their support in facilitating our event, and especially to Molly Hall, who's again in the nerve centre, pressing the buttons and pulling the levers to make it all happen. Well, the webinar format has enabled us to start the day with interactive sessions in chat rooms, each one hosted by our sponsors. There's Cripps PG, DHA Planning, Holloway Architects, Locating Kent, and of course, my director colleagues from Caxtons. Well, I hope you enjoyed the topics and found the sessions useful. And we thank all of those companies for their sponsorship support, plus one other sponsor who's with us today, MHA McIntyre Hudson. We've got 5 presenters for you this morning. Firstly, Sue Foxley, on behalf of Caxtons, will present an overview of the report. Sue will be followed by Roger Gough, leader of Kent County Council, who in turn will be followed by our first guest presenter, Kathy Parker, Professor of Marketing and Retail Enterprise at Manchester Metropolitan University, co-chair of the Institute of Place Management, and research lead for the High Streets Task Force. And following Professor Parker is our second guest presenter, Lisa Carlson, Chief Exec of Canterbury Business Improvement District and chair of the Association of Town and City Management. And we're hoping that our closing speaker is Derek Murphy, Cabinet Member for Economic Development at KCC, but a retimed KCC Cabinet meeting might intervene and spoil the plan a bit, but we can only wait and see. Now, should you have any burning questions arising from what you hear, you can raise it through the chat function on your screen, and we hope to have time at the end to cover a very small number of questions. It'll be helpful if when you log your question, you identify which of the speakers to whom you would like to aim the question and let us know who you are. So now, let me introduce you to Sue Foxley, who will take us through the highlights from the report. Over to you, Sue.
Thanks, Ron, and good morning, everyone. Hopefully I can share my screen. So another interesting year, and I suppose what the positive thing is from this year is that we're probably in a better position this year than we thought we would be when we met last year. If we kind of think back, we were only just starting to test and get the results for vaccines at that point. And certainly from an economic point of view, we're in a better place as well. We're looking that we'll be back to our pre-pandemic levels of GDP a little earlier, by the end of this year, early next year. And the pace of growth has certainly picked up. It's been a strong recovery this year. I suppose the point, though, is that it hasn't been easy, and there's a lot of misstructure in the economy, and it's been very much driven by the service sector, and other sectors have struggled. If we just look from a Kent perspective, we can see that employment has risen to levels prior to the pandemic, and it's been a really strong recovery. and that's the red bar there. If we look to the right, the screen on the right, what we can see is actually part of the reason for this is the Kent economy is very service driven, and if we can look at the UK GDP, it's really the recovery has been driven by that service sector. Many other sectors have really struggled, whether it's due to supply issues, employment issues. So Kent has benefited from the fact that its economy is very service based. And one of the aspects of that, and it's really important to the county, is its science and business base. And just to spend a few moments looking at the science sector. Science parks have done particularly well this year. We've seen a lot of new lettings, which is very positive in this environment. Discovery Park have seen 36 new lettings, a number of startups, and there's also now close links with a number of the London research institutes as well. And there's a growing amount of lab space. Kent Science Park is actively looking to expand, and again, there's strong demand there. Similarly, the business park market has really held its own, and that's been positive in a market where a lot of office occupiers are rethinking about their structure and how they're going to operate in the future. So all of this has driven a small increase in rents over the last period. The town centre market, of course, has struggled a little bit more. The same across the country, but actually rents have sort of generally held up, and actually there's some interesting new developments in terms of co-working space and flexible workspace, which really have come into their own. So it has been some positive moves there, but companies are certainly thinking about their structure. The industrial market last year, we mentioned, was really a strong market, and that again has continued this year. For those of you who joined Mark Coxon's session this morning, it really is some staggering figures. He gave a lot more detail than I'm going to be able to cover just at the moment. But it really has been quite impressive. And of course, part of that is the fact that we're all shopping a lot more online. And there was a real unknown in terms of whether that pace of online shopping would continue as we were allowed to get out a little bit more. So if we look at the levels, it was just below 20% prior to the pandemic, but we're still, even at this point, close to 30% in terms of online shopping. And of course, that has implications for the type of space that is being delivered. Thankfully, there was a lot of supply coming through the pipeline. So we've seen retail operators, logistics operators, and corporates taking a large amount of space. Of course, there's the Amazon space, the 2.3 million square feet near Dartford. So, if you kind of think about the scale of that, that's larger than Blue Water Shopping Centre. So it's a large amount of space and really shows that mismatch between the retail sector, which we're going to hear about in a little bit more detail later on. We've also got pre-lets by IKEA and Goodman as well down at Crossways. But actually still, despite the rents going up, we are relatively more affordable than a number of other locations. And I mean, it certainly is the case that a lot of operators are facing some very high costs. Now, if you think about the scale of these units, that's a very high cost. And there are differences across the county in terms of the types of space. And it's probably also worth mentioning, it's not all about logistics. There is also a great deal of industrial strength generally in terms of manufacturing, but also particularly trade counters and strength with the construction industry in Kent as well. So this links really closely to the retail market in terms of what's been happening there. What's interesting is that retail sales are actually higher now than they were prior to the pandemic, as we can see from this chart. But the nature of those sales, as we talked about before, has changed. So while food is still relatively, we go food shopping, I think it's the Kings Hill building, the Aldi here, there's still development going there. The clothing, footwear and non-food generally has struggled more, and more of that has gone online. And I know I won't go into long detail on that because we're obviously going to talk about it in following sessions. But it does have implications, clearly, for the types of town centre, I suppose, anchor tenants that would have drawn people in. So town centres are having to find a different route. Rents have fallen, and this rebasing has, in many ways, allowed new occupiers to come in. We've seen an increase in independent occupiers. And also, I suppose, it's the experiential side of things in terms of activities. We've seen Pure Gym in Maidstone City and Spirit of Sittingbourne, and there are a number of other things that have actually boosted during the pandemic as people are going to town centres for different things, not just shopping. And it's also changed a little bit in terms of the rental picture across the county. Tunbridge Wells has dropped a lot, but remains a very strong and the highest rent. But what's interesting there, the picture shifted a little bit, and it's now more focused on the experiential sort of Pantiles area rather than the core shopping centre. And these are just a couple of statistics really in terms of the vacancy rate is still going up, but actually it's the pace of rise is slowing. So just onto the residential market, which I think I said last year we thought this was going to slow, and actually it hasn't slowed quite as much as I thought it would. I would say it's stabilising now, and this is the UK picture. We have taken figures from Zoopla, and if we kind of look back at just sort of what this picture, the picture looks very similar in terms of the Kent figures, and based on the Zoopla figures, which provide a sort of a stable view of activity, it's very much focused on. We've seen the growth across all of the markets, and it's pretty stable. Probably the markets that've seen less growth are the commuter towns, where I suppose occupiers are sort of thinking about what they want to do, whereas residents are moving to a number of the more rural areas because they're able to, because of work. We're really grateful to our RPC for providing the statistics, as we are, sorry, I should have mentioned earlier, to Craddock Retail for their retail statistics as well, and their expertise in that. They help us out, as Ron said, in great detail in terms of these reports. So these are RPC statistics in terms of land values, and we've seen this go up across the board. And I suppose what is really interesting is that growth is across the county. It's not just the West Kent or commuter zones or anything, it's across the county. And this has meant that a number of schemes have been brought forward earlier than was expected, and a number of developers are looking to build their land banks again as well. So it's a strong housing market at the moment. And just on to my final slide, because I think my time's about up. I suppose, you know, as we come through the pandemic, the direction of travel is becoming clearer now in terms of how we're going to live and work. And then businesses are in the position to start to make some decisions about how they're going to operate, whether it's, you know, town centre offices or high street shops. So I think that is starting to become clearer. But there are some economic challenges. We're likely to see interest rates rise. We've got inflation, and there are staffing issues across the board, as we all know. So there are some wider economic challenges that, you know, are not just Kent issues, but they present real issues for many businesses and households. But Kent remains relatively affordable, whether as a business location or as a place to live, and that does provide the county with some advantages in terms of business strength. And I suppose the final thing to say is physical location, as we found during the pandemic period, is really important. People have placed an awful lot of emphasis on where they live and their home, and where they work and their working environment. And I think that's going to become even more important. So, you know, we've got our forecasts, and these are a lot better than we were expecting last year across the board, really, you know, and particularly actually some of the retail warehouse. So it's a more positive picture on the property side, but I think property is a bit more than just the returns. It really provides an opportunity for change and reinventing locations, which are going to need it in this sort of post-pandemic world. So a quick canter through, but hopefully gives you a picture for some of the discussion later this morning. Thank you very much, Ron.
Well, thank you, Sue. Actually, really pretty upbeat considering we've been through a year and a half of pandemic. So as ever, a lot of detail in the report, and you can delve individually into your specific sector interests with your own copy of the report, which you can download from kentpropertymarket.com. Now, just before we leave Sue, I ought to mention that this is her final appearance for us, moving on to new challenges. So a huge thank you on behalf of everyone who's benefited from her professional analyses and expertise. And of course, all of us a big thank you from all of us involved in the production of the report, especially from Caxtons. So thanks and good luck, Sue. Now on to the County Council, whose involvement, of course, is pivotal to planning and infrastructure of Kent's property market, and of course to the continuing publication of this report. And I'm happy to tell you that Roger Gough, leader of Kent County Council, joins us again this year. So over to you, Roger.
Thank you, Ron. Good morning, everyone. It's always a great pleasure to take part in the launch of the Kent Property Market Review, now in its 30th year. Not quite my 30th year here, though I have actually participated in a few. I'm very grateful to all of the sponsors of the report. We hope that my colleague Derek Murphy will be able to set that out more fully later, though, as Ron mentioned, we have an unusually early start to our main county council meeting today, and that may have some effect on this. Now, a year ago, we spoke about the resilience that the Kent market and the sector had shown in the face of the pandemic, and the underlying drivers of demand in terms of our valuations, our sector strengths, and geographical location. Now, a year on, we can see how those trends are playing out as we've moved with whatever qualifications into a recovery phase, and we see how the pandemic has accelerated trends that in many cases were already present before it struck. Now, as in past years, we see some real strengths in the Kent economy, which are then reflected in property market performance. A good combination of location and affordability, strength in key sectors such as life sciences and creative industries, as well as the continuing weight of areas such as construction and logistics, the great offer that we can provide to residents and to visitors in terms of our quality of life. And the report also makes clear where the challenges lie. And Sue touched on those, some of them national, such as, or even international, such as supply chains, labour shortages, inflation and interest rates, with an eye to the Bank of England later today, but also local challenges, such as securing the right levels of skilled labour within the county. Now, the strategic priority for the County Council, and this is reflected in our approach and our initiatives, is to build on those strengths and where we can to start to address those challenges. Now, in the course of the pandemic, we set out, and this was done under the auspices of Kent and Medway Economic Partnership, and it was very much a partnership product between councils and businesses in particular, the Kent and Medway Renewal and Resilience Plan, which was very much focused at that stage on keeping Kent and Medway open for business, supporting local firms as well as inward investment through the crisis. And that included the work, indeed the extension of the Growth Hub Business Support Helpline, very much delivered by the Chamber, additional loan support through the Kent and Medway Business Fund, and I'll return to this as well, over £30 million investment in immediate economic infrastructure projects. Now, as the economy returns to growth, work is now starting on a much longer term strategy, economic strategy for Kent, ensuring that jobs and businesses are resilient and adaptable to all the economic changes we see, particularly in the light of the net zero economy, and that we get the conditions in place that Kent benefits from this as fully as possible. A second link to that is the work of the Employment Task Force, which I chair, again bringing key players together, started by being focused on getting us through the crisis, but now is increasingly focused on dealing with the structural challenges that we see as we come into recovery, and in particular, as I say, ensuring the right levels of skills to meet the demands of a changing and growing economy. Now, I'm not going to repeat Sue's detailed account of the major sectors and how those are covered in the report, but I do want to link those to both significant developments and some of the themes that I've just mentioned. So the first, of course, is the area of offices, and that is one which is of great significance to us because Kent County Council, of course, is not only an authority that takes a view across the economy in Kent and seeks to do all we can to support economic development. We're also, of course, a major holder of property and of a large-scale office estate. And we are, like others, examining very carefully and starting to move to changing both our office and indeed our community-based estate. And I think the emphasis in the report on the hybrid model developing and the impact that that has on town centres absolutely matches with our experience, with the direction in which we are going, and the way in which we believe that we can then use that to try and shape some of the developments within town centres. And we think that the importance of the public sector estate in this is quite significant. And the report mentions actually a small example, but not insignificant, the mixed-use development around the Southborough Community Hub, which is delivered by KCC, Tunbridge Wells Borough Council, and Southborough Town Council, with funding from land sales, the NHS, and the Footfall Foundation. Moving on then in terms of the world of industrial and distribution, again, some of the report highlights some of those very large scale moves, in particular Panattoni on the former Aylesford newsprint site, and the Amazon development on the former Littlebrook power station. And of course, that whole sector is one that remains an extremely strong one. Clearly we've seen both, as it was emphasized, both industrial and distribution development, and it's very important that Kent retains its strength in those areas. On business parks in particular, again, as Sue mentioned, the link in particular to life sciences, the role of places such as Discovery Park, Kent Science Park, and Kent Medical Campus, but also strengths in other key areas in technology and in professional and business services. And in the conclusion of that section of the report, there is, I think, a very useful phrase which says that, and I think this applies across a number of areas, Kent's affordability advantage will be important, but attracting and retaining high-skilled workers will be more so. That is linked very much to the kind of offer that the county can make in terms of that mix of, as I say, a skilled workforce, but also quality of life that can attract people to come and live and work here. And that remains a central consideration for us. On residential, Kent continues to outperform, and we see some closing, though not fully by any means, of the gap between us and other parts of the southeast. And of course, there's been over recent years a steady increase in house building, now up to around 8,500 units a year. But there remain significant challenges. One is very much around the acceptability of house building to communities, and how do we ensure that that is delivered. One of the things that we emphasize, is mentioned in the report, is the infrastructure proposition that Kent authorities have put to other local, to government, to ensure that infrastructure precedes or goes alongside development, rather than lagging behind. And the second, of course, is significant constraints in areas such as what is known as the Stogmarsh issue around nitrates and phosphates. And that is something on which the local authorities engaged in this issue, and the Kent and Medway Economic Partnership are deeply engaged. The report does set out a whole range of the major developments, the fundings secured this year, and indeed inward investment. There are, I won't list all those important developments, but they do very much emphasize that Kent is still very much open for business. Kent is also, through the county council and district councils, supporting continuing development in both residential and commercial through our no use empty scheme, which has secured another £4 million investment from KCC to provide larger secured interest bearing loans to developers who bring derelict land or sites back to life. This is now in its 16th year and continues to deliver, now in partnership with all 12 district councils. Locate in Kent continues to bring companies into the county, helped some 92 companies over the year to July to set up, move or expand in Kent and Medway, projected to create nearly 2,000 new jobs over the next 3 years and retain another 2,000. And there is a strong pipeline also of investment projects for companies looking to start up, expand, or relocate. In terms of funding packages secured from government, we've seen the Levelling Up Fund recently with important announcements, particularly around the new town works in Ashford, as well as projects in Medway, Margate, and Ramsgate. And in terms of the Local Growth Fund, which KCC is responsible for delivering, we have the Thanet Parkway Railway Station, now set to start operation in May 2023, serving Manston and Discovery Park, and a range of other projects. And through this, we can actually see important developments, as I've mentioned, in both in the creative sector. I mentioned the Newtown Works, and also through, in particular, the Getting Building Fund, the development of the Jasmine Vardaman Centre in Ashford on the former KCC site at Javelin Way, Ashford, which will be the centre of a major new arts hub with 26 light industrial units as well. So that will create an important centre of activity there. All told, I think we do have a story of a recovery. And I think what we are looking to do is to address some of those major strategic issues, build on the advantages, which I think we do see within the Kent economy. And that will be, as I say, our focus over the coming year. I hope very much that in a year's time, I'm able to return and to be able to report back on continuing progress in these areas. Thank you.
Well, thank you very much indeed, Roger. Council's clearly still very busy and very positive in our local property market. So thanks again. Now we move on to the first of our two guest presenters, Cathy Parker. Cathy is Professor of Marketing and Retail Enterprise at Manchester Metropolitan University, where she also co-chairs the Institute of Place Management, an international professional body within the university that supports people committed to developing, managing, and making places better. She's also research lead for High Streets Task Force, a government-funded support to local leaders in towns and centres and high streets in England. So everyone, we have with us this morning a real expert in the disciplines crucial for the survival of our town centres. So over to you, Cathy.
Thank you very much, Ron. First of all, I'm going to start with a little bit of an apology. There may be a little bit of background noise. I've been waiting to get my roof fixed since June, and 4 scaffolders have just turned up. So they're being as quiet as they can, but they are erecting scaffolding around the front of my house. So apologies for a little bit of a noise in the background. Well, thank you very much for the invitation. To speak at the launch of this report. It's so important to get timely, detailed information like this. So I'll really look forward to reading my copy as well. My presentation is going to focus on the sort of new normal for towns and cities. I'm going to have a look at their changing patterns of usage and how people are sort of reacting to these changes. Thank you very much for the introduction, Ron. We are a professional body. We have over 1,000 members. We also support a group of business improvement districts called the BID Foundation. We're a research centre. We have an international journal, which is one of the leading journals in its field. And we also offer qualifications in place management and leadership, as well as leading the government's High Street Task Force. And the research I'm going to share with you today is research we've done for the High Streets Task Force. It's brand new research. It's not even been published yet. It's due out next week. It's not quite the world premiere because I did present to the Manchester Chamber of Commerce last week, but it's definitely a first for the South. And if we want to answer the question, apologies for some grass now in the morning, you know, if you're choking on your bacon sandwiches or vegan sausage rolls, don't worry, I'm going to talk you all through these things. It's important to understand the new normal by understanding what the normal was before. This is a graph that shows footfall in towns and cities. And it's been falling basically for the last decade. So you can see 2015 to 2019 there, very, very gradual fall. The trend line, which is the black line, is going down, and it equated to a decline of around about 5% over the last 5 years, so about 1% a year, not huge, but pretty constant. And this footfall data is provided for us by Springboard for about 200 towns and cities across the UK. The reason I'm showing you this graph is because it shows you how predictable normal was before COVID. So although there's a downward trend, you can just sort of see it there. This blue and grey lines here is our forecast. So before COVID, we could predict UK footfall with 95% accuracy. So it really was, business as normal, going on, just with a small decline. But the impact of the pandemic's been so profound that last year we couldn't forecast footfall at all in the pandemic with any accuracy at all. So we've just given up for now. We're still not back to any degree of normality that allows us to use our forecasting model. But that's not really a bad thing. The trouble is with these sorts of forecasts is that they only ever worked at an aggregate level. So yes, we could forecast the whole of UK footfall, but that doesn't tell you anything about any particular town or city. Some are doing better, some are staying the same, some are doing a lot worse. And that's the first takeaway that I hope you take from this presentation. If you need to be understanding your own new normal in whatever towns and cities you're investing in. And you need to do that in partnership with local place managers and leaders, people who really understand how those towns and cities function, to do that analysis. And that's as true now as it was before COVID. But I'm going to give you a little bit of, hopefully, some overall insight that might help you do this. And the second takeaway from the research is that the new normal may not be that different to the old one for a lot of places. I've just said that we can't forecast with any real accuracy. Well, that's certainly true in terms of footfall volumes at the moment, the number of visitors to towns and cities. But the footfall patterns in many locations do seem to be very resilient. So what that says is people's habits haven't fundamentally changed. It's just some of what they did, in particular, go to the office, go out at night, they're doing a little bit less frequently, and international travelling, they're doing a lot less of. So this graph compares forecasted footfall from January 2020 in red. So that's that top line there. And it's the footfall we'd have expected to see over 2020 if we hadn't had COVID. And the line in black is the actual footfall. So if you have a look, sort of here's where COVID's, here's where COVID started, and here's where we had the first sort of opening of non-essential retail. After that, you'll see that the volumes are very different, but the shape of the graph is pretty similar, and that's because the habits. That there's still the December peak when people go back, people are going out Christmas shopping there. There's the January lull. And a lot of these things were reinforced by the timing of the lockdowns as well, which tried to keep businesses open at key times. So really old habits die hard, if you like. So, I mean, although we've had COVID for a long time, it's unlikely to take away the sort of real endemic patterns, if you like, of how we use our towns and cities. And the third takeaway is that recovery after the vaccine has been rolled out has been so much stronger than earlier in the pandemic when restrictions were first lifted, but there was a lot less immunity in the population. The red line at the bottom shows recovery footfall the week after non-essential retail opened on the 14th of June in 2020. So in the first week after retail opened through Sunday through to the following Sunday, footfall increased by 62.9%. If you compare that to the green line, when non-essential retail opened on the 11th of April 2021, this is when the vaccination programme was in full swing, footfall increases by 112%. That's nearly twice of what it was when the restrictions were lifted first. So that bounce back is so much stronger once people, not only have restrictions been lifted, but they feel confident going out because of the vaccine. And then when all restrictions ended on the 17th of May this year, footfall rises slightly again, 7.7% on the previous week. We had some really mixed messages about returning to work, whether it was safe to go on public transport and so on. And what I read from this graph is that consumer confidence and common sense prevail. When people feel it's safe to go to work and shop and travel and so, then they want to do so again. Okay, so let's turn back to what I was saying about understanding the resilience of footfall patterns in particular towns. We've been establishing the dominant functions of towns based on their footfall patterns, just basically graphing the amount of footfall that towns have, between January to December, putting that on a simple bar graph. 10 years ago, most towns had this comparison signature. So they were fairly steady through the year, and then you see this pickup just before Christmas when people do their Christmas shopping. So these type of towns have a wide range of retail choice, leisure, food, beverage, very strong retail anchors. People travel a considerate distance to visit them. They serve a wide catchment area. So Manchester, my biggest city, here in the northwest, has a comparison signature. But by 2019, less than 10% of UK centres had comparison signatures, showing the impact that changing shopping habits had made. So Sue talked about the shift in retail in online. These are all things that have been going on in the background for a considerable amount of time and changing the function of many of our towns and cities. So while most centres are major cities that have this signature, there are some regional centres that still have a comparison signature, some in your area like Bromley. About 10% of centres have a holiday signature, so these ones peak in the summer and they're much quieter in the winter. So they're very attractive to tourists, but they often have quite a relatively poor offer for their local catchment. So they find it very hard. They're sort of like dual personality places, find it very hard to cater for their local catchment. 36% of centres are now speciality. These get busier after Easter. You can see that peak there, and they're busy in the summer, but they also have a peak before Christmas because they do have a good retail offer, although their retail offer is often quite different from the comparison centres because they have a lot more independence. So the number of speciality towns have grown significantly, and I think this reflects the turn towards historic and cultural-led regeneration. So they seem to balance that, and they also balance the needs of the visitors with the local population in a better way than the holiday towns do. And when we last crunched the numbers, Dover has a speciality signature. Nearly half of all the centres now are classed as multifunctional. They're not defined by the retail offer, but they have a mixture of retail, services, employment, leisure, culture, education, health. They have a fairly flat signature through the year. So Ashford, Bexley Heath, Canterbury, Gravesend and Maidstone all have multifunctional signatures. However, our analysis shows there's two types of multifunctional. There's one that's sort of, I'd say, purposely multifunctional. So they really do try and pack all those things in. And then some of them are just failing to be any other type. So they've just ended up having a very flat signature because they're not really any of the other types. So it's sometimes you can't really understand, even if your footfall data sort of gives you a signature, you still need to understand from the local perspective, what's driving that. Anyway, that leads to my fourth takeaway, that the pandemic has not impacted on all town types in the same way. So this is a graph of footfall by signature type from the beginning of the pandemic here, all the way through to October this year. You can see it's the comparison centres, so those ones that were sort of retail anchored in dark blue, but they are mostly major cities and regional centres. So I'm going to pick this apart and look at size as well in my next slide. But have a look at the UK's holiday towns, because they had quite a different pandemic. And the Sunday before the spring bank holiday here on the 30th of May, I think it was. Yes, somewhere over here. They attracted more than 50% of the number of visitors than they did in 2019. But these are predominantly smaller places like Newquay. And actually, when it comes to understanding the impact of COVID, size matters more than anything else, which is my fifth takeaway. We've been looking at establishing a simplified place hierarchy based on total footfall values, so volume. So whilst there's Experian and other ways that, will give a classification to your town centre, we just look at the number of people that use it, and we have a very simple hierarchy based on activity. So we used our clustering algorithm on the COVID footfall that we saw in 2020, and 4 types of centre emerged when we applied that algorithm. The recovered towns, which they bounced back. The summer boost towns, they were the holiday towns that had seen actually, in some cases more footfall. Reduced towns, and then the ones that had much reduced footfall. So footfall levels still, even after restriction had been eased, they were still 50% or more down on what they were before. And this slide shows why your size or your designation in terms of the footfall volumes matter. So in terms of the major cities, well, there's none of these in Kent, but the 100% of them were reduced. If you go down a level to the regional centres, so they're places like Bexley Heath, recovered, Bromley, reduced, Canterbury, reduced, Dartford, recovered, Gravesend, recovered, Maidstone, reduced. You see, there's a bit more of a mixture. So mostly reduced or much reduced, but some recovered. And that sort of tends to be associated with the town type, so whether they were speciality or not. Then move down to the level of the town, you start to see as these smaller settlement sizes much more likely to have recovered. So Dover recovered, Ashford reduced, and at district level 100% have recovered. We don't have any Kent districts in our sample of springboard locations, but at that district centre level, these are your local neighbourhoods, and they have, in some cases, attracted even more footfall over COVID as more people are working from home. So what does this mean going forward? Well, I think this says to me that recovered towns have a more resilient form and function. They're just going back to what they were before. That sort of form and function, the size and the offer is pretty resilient. But reduced and much reduced towns and cities may be facing a slightly more normal. So sort of the larger you are, the more likely you are to be sort of considering this new normal. But could this new normal be a better normal? People have found benefits to some working, but certainly some working, but more living locally. We talk about working from home, but it's actually spending more time living at home that's important, because it means you've got time freed up from your 5-day-a-week commuting to not only enjoy your local high streets and green spaces when you're working from home, but you probably make more of your trips when you go to your larger centre to go to meetings and so on. So I think perhaps our cities and larger towns can learn from thinking a bit smaller. Concepts like the 15 and 20-minute city promote much more livable neighbourhoods with residents' everyday needs satisfied within walking distance. Residents have not been well served in larger towns and city centres. They're not places for families or older people to live. So Roger, you were talking about, attracting highly skilled workers. They tend to like to live in bigger places. So let's make sure if the places that they want to live are as livable as possible. So places like Manchester, Stockton-on-Tees, Nottingham are replacing redundant industrial and retail space with better quality public space. They're making their centres more livable. And I think we should stop talking about individual winners and losers and understanding more about how whole geographical areas function. So let's stop pitching our cities against towns and towns against towns and appreciate the relationships between them. Someone might be working from home in a small town, as I said, 3 days a week, spending more money in their local shops and services, and then going to a larger centre like I do when I go to Manchester a couple of days a week. I'm staying on for eating out, going to the theatre and so on. So, there's leisure, shopping, cultural opportunities in places that we just don't get in these larger places that we don't get locally, and we certainly don't get from the internet. So my last takeaway is that a better normal will only come if it's the conscious ambitions of our place leaders. And by place leaders, I mean all those that care about the future of their cities and towns across business, local government, and the wider community. This is Sir John Timpson, who conducted a review of town centres on behalf of government back in 2018. He felt very strongly that the answers for turning failing high streets into successful high streets were to be found in the people that had a stake in those local places. And that's how we have the High Street Task Force, because Sir John was very passionate about these people and he wanted something, training, advice and support for them. And our research going back many years has shown that it's local leadership, partnerships and people that are key in managing the adaptation of towns, because with COVID, you name it, internet shopping, electric cars, climate change, our towns are constantly having to change, and we need people who are much more proactive in adapting to that change. So let me just end by sharing you with the characteristics of good place leadership. First, it has the capacity to work with a range of investors, across public, private and community. It's always collaborative. There's no one place leader, but knowledgeable and passionate place leaders working together from across interests in partnership. They work together under some sort of common vision, one that inspires other people into action too, not necessarily leaders, but lots of followers. And there's a couple of other points. It's not parochial. It accepts ideas from other places. And finally, it needs support and facilitation from government at all levels. Place leadership is not government at either national or local level doing things to people, because government always has to do things with and in partnership. So the leadership has to come from the location. And I know you're going to hear from Lisa Carlson next, who's a good example, tell you about place leadership in Canterbury and how the businesses through the Business Improvement District work in partnership with the community, council, landlords and other investors. And if I was an investor, I'd always be looking at the quality of place leadership in any location, the strength of the partnerships, the compellingness of the vision. But you also have the opportunity to be part of the place leadership team, or at least encourage your local agents or asset managers to be, if they're not already. Problems don't just solve themselves, and ultimately it is people that make places. Thank you very much for the opportunity to talk a little bit about our research. I'm going to read your reports. There's a lot of insight there, I think, showing what's happening in a particular, in Kent, in a particular area. But I think they're trends that we're seeing across the country. Please look out for the High Street Footfall report. That's going to be published next week. It's not going to be ready till next week, so you've got plenty of time to read the Kent Property Report first, and do drop me an email if you want a copy. Thank you very much.
Well, thank you very much indeed for such insight, Kathy. Fascinating stuff. And as Kathy said, it's important to engage with local experts when you're evaluating your investment opportunities. And we've got one such expert as our second presenter. and it's Lisa Carlson. Lisa leads the multiple award-winning Canterbury Business Improvement District, raising the city's profile in Kent and beyond. She's also chair of the Association of Town and City Management, dedicated to promoting the vitality and viability of urban centres across the UK and the Republic of Ireland. She's also director of Canterbury for Business and Canterbury Climate Action Partnership. In fact, she's into pretty much everything Canterbury. So the virtual floor is yours, Lisa.
Ron, thank you very much. It's a pleasure to be here today, and really look forward to sharing some thoughts with you on the future. I want to talk about really the future of the town centre ecosystem. I'm going to use town centre for short. I know Canterbury is a city, otherwise I'll be talking for too long. So I want to talk about how we need to de-anchor from the past and what it's going to look like in the future. There are a lot of issues facing urban centres, but I'd like us to look at two in particular today, two particular transitions that we're all facing, and then talk about how we can all navigate our way through these transitions to build a better future. Just first, very, very briefly, I promise, what is a business improvement district? So that's my day job. Bids are business-led partnerships that agree by ballot every 5 years to pay an extra levy to fund activities that will improve the trading environment. They originated in Canada in the US in the 70s, brought to the UK in 2003, and there are now over 320 around the UK and Ireland, investing over £150 million. And this money is invested in projects and activities that are ring-fenced on business priorities, and also providing a voice for businesses. And I think both are equally important. I also chair the Association of Town and City Management, which is a non-profit membership organisation dedicated to promoting the vitality of urban centres, again, around the UK and Ireland, and helping people, so all of us, make great places. I mean, this includes nearly 500 practitioners and partnerships, and we're also co-chair of the High Street Task Force Sector Leaders Group, so involved with some of the work that Kathy's doing as well. So as I said, there are many, many transitions and challenges facing our urban centres, but let's just look at two that have dominated conversations across Kent, but of course nationally and globally as well. And the first one, this is not a surprise, is the changing nature of what goes into bricks and mortar space. And we know that retail has been hit hard, especially fashion retail. Debenhams is one example that has been really visible in our town centres in Kent. And this is born out of the data that we have. So according to research by PricewaterhouseCoopers and the local data company, almost 10,000 multiple retail stores disappeared in 2020. And that's the worst annual decline we've seen in over a decade. But if we take a closer look at the data, the pandemic was really the icing on the cake in a transition that's been happening for a long, long time. So if we look at the black line at the top of this graph, so this is tracking closures from 2015 to 2020. The black line showing closures, the pink line showing new store openings. Now, just a side note, we have really quite strong commercial interest in Canterbury, and I think we've seen that through this report as well across Kent. But nonetheless, this is what we're looking at nationally in terms of the trend. But if we look at the orange bar chart at the bottom, I think this says it all, because looking at the data year on year from 2015, 2020 is in line with every year before that. And you almost wouldn't know looking at this that there's been a pandemic at all. So what we do know is that retail has been transforming for some time. Now let's look at an example of this. I don't know if any of you in this virtual room know about Ryan's World. Let me introduce you to Ryan. If you have children, you might know Ryan's World, and you might know that your children probably prefer watching this to CBeebies. But Ryan is a leading face of the retail revolution. Basically, Ryan's World is a YouTube channel. Ryan plays with toys. YouTube pays him to play with toys. Google pays him to pay with toys. Advertisers love him. Ryan is paid twice over to play with toys, which is absolutely incredible. He has over 30 billion subscribers on YouTube and over 50 billion views. Ryan is worth $112 million, which is extraordinary. And he's only about 10. So this is how the retail sector is just one example of how the retail sector is changing beyond all recognition. And it's not just about social media or the pandemic. So many aspects of technology, and I think that's born out of what we're seeing in terms of the sectors coming to Kent as well. So many aspects are changing our behavior. And this is an example of how the things that used to be essential to drive us to our town centres are now discretionary. So what that means is our understanding of place and space has been disrupted. I want to take a little quick look at online spending. Now, this differs from the graph that you saw from Sue because this one includes food and non-food. So we saw at the beginning of the pandemic or before it in January 2020, online spending at just over 20%, and we knew it was on an upward trajectory. Pandemic meant that out of necessity, that absolutely shot up to about 37%, but we see that for food and non-food coming down a little bit. Now we know that, as Kathy showed in her data, that our habits haven't fundamentally changed. We know this is going to average on an upward trajectory in terms of online spending, but two factors. Number one, we've seen the rise of localism through the pandemic, which has changed things in some areas, and we need to look at that very locally. But secondly, I'm going to come on to the second transition, which might shed some light on how this could change. So again, our understanding of how we use our town centres of space and place has been completely disrupted. And let's be clear, and I say this because I'm aware of the commercial interest in Canterbury and in our town centres. Retail may need less space, but not no space. Just an example of that, in Canterbury, our vacancy rate is about 10%. It's been coming down slowly after the last year and a half. But taking in the knowledge that I have about the commercial interest in the city, that's probably really, in real terms, about 7%. Things are going to be a lot more fluid, but I think we do have some hope. We've seen 37 new businesses open in the city since March 2020, including 2 in that November lockdown or tier 4 or whatever that was. So what I think is becoming clear to us is we have to re-anchor. The future town centre needs to think about how its space can be used, and this is going to be a mixture of retail, health, technology. We've talked about creative industries. We've talked about science. It's going to be about well-being and community, for example, libraries and job centres and council offices. And it's going to be about workspace, and we've heard that today as well. I think busy urban centres are not a thing of the past, but the reasons why people come together are changing. And this is reflected in the evolution of what goes into bricks and mortar and the evolution of our town centres. So transition number 1 is a new industrial revolution. The way our space and place is being used is fundamentally changing. Transition 2 relates to the climate crisis. And I think this is where we know we're in a crisis. We know it's going to be difficult. But it may very well present us with an opportunity. Over the past year and past few years, we've witnessed many extreme weather events, and this touches all continents. These are just a few examples from the United States, Siberia, Mexico, Turkey, Greece, and Germany. And in the UK, we are not immune to it. We know that the residents of Fairborn in Wales could be our first climate refugees because flood defences are not likely to be adequate. We know as well that our town centres are both the perpetrators and the victims of climate change. So urban centres consume over 2/3 of the world's energy and account for 70% of global CO2 emissions. And we're heat islands. We're vulnerable to extreme weather due to an accumulation of asphalt and concrete and stone, beautiful stone in Canterbury, combined with the loss of biodiversity. So we are perpetrators and we are victims. And therefore, our focus on reducing climate emissions and improving biodiversity need to go hand in hand. And we are seeing that in Kent. In the case of Canterbury, we're a UNESCO World Heritage Site, where the majority of the city is a designated conservation area with scheduled monuments, registered parks and gardens, and numerous buildings protected by statutory listing. We have a beautiful river running through our city and we sit in a valley. So we have our work cut out for us. That is absolutely true. But yet, I would like to suggest there is hope. And I would like to suggest that for some very good reasons. Just looking at how we're tackling the climate crisis already, we have the passive house homes at Fairbrook Grove. Our local authorities have declared a climate emergency. Commitments to net zero are being made. Pathways, and this is important, the data is so important. Pathways to net zero are being analysed, developed and acted on as we speak. We've had recent events this week, the Kent Environment Strategy Conference, and Canterbury's first Climate Action Week happened last week as part of the Canterbury Festival. COP26, you can't escape the news from that, with a delegation from Canterbury's Climate Action Partnership there now, and I look forward to joining them next week. We've also heard amazing carbon reduction commitments from businesses. Last week, when we had our Green Business Day, we heard about businesses who are decarbonising and who have embarked on a circular economy journey. Some of those benefiting from the low carbon grants, I think back in round one. So this work has been happening for some time. It does need to accelerate. And at the Association of Town and City Management, we've been working with Dr. Neil Jennings from the Grantham Institute at Imperial College London. Much of what needs to be done, and this is what his research shows, much of what needs to be done to make sure urban centres are resilient to climate change makes good business sense. Because as we increase the attractiveness of our town centres, more people will want to be there, more people will want to enjoy it. That drives footfall, that drives spend, that drives investment. And there have been many studies about the link between green space and well-being. But what we're seeing now is the link between green space in the urban environments and the investments we make to decarbonise in dwell time, footfall, interest from business and investment. And we've seen some examples, Kathy mentioned it from Stockton, the Camden High Line. And these are really, really important examples. We've seen it also, I'm sure, through recent local plan conversations, levelling up conversations. We've seen examples like this come to the fore. So we know that people-centric and active streets are both good for the environment and also good for business. I'm not at all suggesting it's going to be simple, but it is doable. And whether it's protection against flooding, or endurance to heat waves, I think what we're going to see is that businesses are going to want to invest in places where the local infrastructure and local leadership is involved so that we can survive these extreme weather events. We know that environmental resilience means economic resilience, and that's important to your investments and to our future. So, how do we deal with a new industrial revolution and a climate crisis? What can we do? And I want to talk about how the solution revolves around local leadership, local engagement. So very much resonating with what Kathy's been saying, and also the partnerships and the ways in which we work together. It's not the only solution. We need our politicians and national and international leaders to do what they're doing now and to make very decisive commitments. But I think there's something that all of us in this virtual room can do together to affect change in our town centres. So as a business improvement district, I'm just going to take this down to my day-to-day and talk through what we do. We want to create a positive trading environment and protect your investments. Now, I'm going to talk specifically about Canterbury now, but the kind of work we do is similar with all business improvement districts, and we've got 3 in Kent. We can provide data. I'll show you some of that in a moment. We can represent your voice in consultations and provide meaningful forums for engagement. And you know, it was right that this event is virtual today. We can do a lot of operational stuff virtually, but I have seen, as we've re-engaged in person over the last 2 months, there is nothing that replaces the business that can get done face to face. So it's been fantastic to get back to some of that. We can work in partnership. So with declining local authority budgets and the need for them to focus on statutory obligations, all of us need to get involved. And I think everyone who uses a town centre day in and day out should have a voice in what happens. And that's why we have to work in partnership. It's our job to improve the trading environment. It's our job to drive footfall and spend. So just pick out 2 of those. And this is some of the data that we can provide. We work with Canterbury City Council, we work with Visit Kent, we work with Southeastern, and on and on and on. So we can tell you about the number of annual visitors, we can tell you about footfall, we can tell you about our vacancy rate, which I've touched on. The last one on the left-hand side is interesting because we're talking, when I first started working in Canterbury, we were at about 50-50 independents and national brands. We're now at about 70% independent, 30% multiples national brands, partly due to the issue of the Stadmarsh and the hole we have in the middle of our high street, and Roger touched on that, and we do really hope there's a solution to that. But actually, on the whole, really encouraging news. And I think the other thing that we can provide as well is marketing collateral. So we've been working more recently with our asset managers and estate agents on the kinds of images and video collateral we have that they can then in turn use to drive investment. And that's been really important. The other thing that we can do, just picking out another one, is engagement. So we host and show up at a number of forums and working groups. And this, as I've said, is where meaningful business gets done. And nothing replaces that, I think. One of the groups that we have started in the last year, we used to run a landlords forum. We've now reinvented that and we host an investor forum, and we'd like to build on that. And so far this year, we've looked at Canterbury's local plan, we've looked at what the Marlow is doing at the Poor Priests Hospital, and we've looked at levelling up. And it's absolutely right that all these different stakeholders, our property owners included, should have a say in what's happening. So to finish up, I think the solution to these two major transitions we're seeing, a new industrial revolution, thinking about what's going to go in our bricks and mortar space, thinking about how we tackle the climate crisis, has got to be about strong local leadership at every level, and that involves all of us in this room. And that's because we need insight from the people that understand the town centre, from our civic groups, our resident groups, through to our traders, our investors. And we all have to be proactively brought into the decision making so that the right decision gets taken. And the future of our town centres must embrace change by bringing forward the solutions that meet the demands of both of these crises. And we can start by re-anchoring around the more diverse offering that we're already seeing, that we've been talking about this morning, and by leading on green and blue infrastructure. So we are creating places that all of us want to be, places we want to live in, work in, visit, and study in. And that's what this is all about. So thank you very much for having me today. It's been really insightful. Please get in touch on LinkedIn or Twitter or email, and I look forward to picking up these conversations with you, because I think what's really important is that the economic health of the whole county is important to our town centres, important to Canterbury, and vice versa. Thank you.
Well, thank you very much indeed, Lisa. It's so interesting to see the stuff that we read every day about what's happening nationally and internationally, actually affecting very directly our own local high streets and town centres. Thank you very much for that. Now, I suspect that Derek Murphy might have had to leave us.
No, I'm here, Ron.
Oh, okay, excellent.
Yeah.
So, well, we're very pleased to welcome you, Derek, Kent County Council's Cabinet Member for Economic Development. So I know you're on a tight time scale, so off you go.
That's good. Thank you very much, Ron, and thank you everybody for attending today. Kent County Council is very pleased to be associated with the Kent Property Market Report, its annual review of the sector and the enormous contribution it makes to the Kent economy. In order to bring this report and event to you each year, the County Council works closely with a number of sponsors who have kindly hosted the breakout rooms today, which I hope you have all enjoyed and participated in. I would very much like to thank our main sponsor, Caxtons, for their continued support and research for this report. The report would not be possible, however, without the support from others, and I'd like to thank particularly Holloway Architects, Cripps Pemberton Greenish Solicitors, DHA Planning, MHA McIntyre Hudson. And I'm also grateful for the endorsement of the report again this year by the RICS. I would also like to especially thank our guest speakers this year, Professor Kathy Parker and Lisa Carlson, who outlined the issues facing retail and the high street, and probably never more so apt or timely than the last 18 months that we've been through. And thank you both for the clarity that you brought to your very good presentations. I'd also like to send out a big thank you to Kent Invictus Chamber of Commerce for facilitating this event. And Molly, thank you very much. You're looking wonderful there. And it's never easy doing these things, and many a slip between cup and lip. But I think you've managed to do extremely well. So again, thank you very much for that. So to conclude, another difficult year for the sector. And everyone, and to the sector and everyone, but lots still happening in both terms of planning for the future and opportunities presenting themselves now to support the sector and, of course, Kent's wider economy. We hope next year that we will be able to return to the traditional breakfast launch and networking event in a suitable venue somewhere in Kent, and I'm sure we will. But until then, I do hope you enjoyed the webinar launch today and this annual opportunity for the property sector to get together. One of the things I think that has come through very strongly is the word partnerships. And certainly at KCC, we're here to help and facilitate and partner you in any way that we can. So please don't hesitate to get in touch with us. That's enough from me. So Ron, thank you very much indeed. And I'll hand back to you. Thank you.
Thank you very much indeed, Derek. We've got 2 or 3 minutes to pick up on some questions. Kathy has already been very busy on the chat line, but perhaps we can bounce a couple of questions off Lisa. One of them is from Richard Longman. How much has the decline in retail been sheltered by the furlough scheme? Might closures accelerate now furlough has ended? Any views from Lisa on that?
Yeah, and I think Kathy picked up on this in the chat as well. So with the point that consumer confidence is bouncing back, we're seeing that, but there is this lag in business confidence, and of course there is a significant debt burden that a number of our businesses are facing. So I didn't mean at all in trying to provide some hope for the future to well, I think we have to acknowledge that significant debt burden. I think we have to acknowledge that this Christmas trading period is going to be really, really important, and we are still moving through a pandemic. But I suppose what I want to do is to break it down a little bit and say, let's look at the data in our specific location. Let's look at how things are across Kent, and we've got a really positive picture on the whole, and let's invest now in the future. I would love to talk more to property owners and asset managers and agents, because we have a really strong story to tell, and we can pick apart how that could work for them now and in the future.
Thank you, Lisa. Kathy, do you want to expand on your online answer?
Yeah, I mean, that's I think it's so important to understand the individual location. I've got I know there's place managers that are inundated with demand for retail property. They haven't got enough retail property in the locations they're in. So, this has been the sort of concern when we take we just look at the overall picture and think, okay, there's less demand for retail property. That isn't necessarily the case. You do have to understand your own local market. I am concerned. I know I spoke to Bill Grimsey earlier in the week, very concerned about the sort of the independents, and they are driving the renaissance really of a lot of our town centres. We did a piece of work recently with the booksellers, and we saw how many of the independent bookstores are a real anchor especially on smaller high streets. So anything that happens to those people, because they're not just there selling stuff, they're being cafes, they're there networking other businesses, they're putting on sorts of evening events and talks, they're really activating our town centres. those sort of champions, those dynamic businesses, you know, if they're at risk from sort of the debt burden, that is a real worry to me, because then who picks up that mantle? You know, who drives the sort of change in local areas? I think we just have to, you know, it's just about getting out on the ground. We need our place managers and leaders to, you know, have relationships with every single business in their patch to know what the situation is.
Thank you, Kathy. Another one that Kathy's already responded to, but Lisa mentioned a particular interest in matters green, and we've had a question from Paul Thomas. So why don't we use all of the town centre's roof space for solar farms to provide green energy? A comment from you, Lisa?
Yeah, I think what we know from the data, from the pathways that have been developed with Kent County Council, and I'm working with Canterbury City Council's Climate Change Board on that, there are pathways to decarbonising and improving biodiversity across the county, and those are known. And a lot of what is going to impact decarbonisation is about solar and wind. But the where and when of that is not always straightforward. And I think what I would say about Canterbury, that it is a conservation area, and there are particular challenges with that, mostly to do with insulation and individual business energy provision. That said, we have seen solar panels go up on the Marlow. There are other significant institutions in and around the city that are looking at that, but it has to be done on a case-by-case basis for all the reasons that I mentioned. And that's why these solutions need to be picked apart so locally. And that's why, you know, these different, the Climate Change Partnership Board, for example, or the Canterbury Climate Action Partnership, we need these groups and we need these partnerships so that we can find the way through all of this. Sometimes it feels like wading through treacle. And I think the bit about solar and wind, and about what needs in hydrogen, what needs to happen across Kent, transport infrastructure in particular, that's so important. But the rest of it has to be done. And that's why, even though the scope 1 emissions that we're working on with individual businesses isn't the greatest percentage of the overall contribution to carbon, it still has to be done. It still has to be done. So it's looking at what support that there is out there for businesses. I mentioned the low carbon grants. There's been the e-cargo bike scheme and the electric vans, and there's more coming down the line now that CRF has been announced, the community renewal funds bids. And we need to, I think from my perspective, I need to be understanding all of that and figuring out how I can get that information to our business community and help everyone on this journey. The last thing I'll say on this, the most important thing is data, as I said in the beginning. So many businesses have already started on a carbon audit to understand, where do I start? What's going to make the most impact? What's going to make the most sense to my bottom line, actually? And doing that work individually with businesses is the number one thing that we're focusing on at the moment, as far as the climate change agenda goes.
Well, thank you very much. Thank you. Well, we're a bit just slightly past 10 o'clock, so time to call a halt, and it just remains for me to thank all of our presenters and all of our sponsors, and to remind you all that you can download your copy of the full report from the website kentpropertymarket.com, and Caxtons will also have it on caxtons.com. So I'm looking forward to seeing you all again next year for KPMR 2022, when hopefully I shall be able to dig out my freshly sanitized frying pan for a proper post-COVID breakfast for you all. So I think you're welcome to stay on for some informal general networking now, but the formal bit is now over. So thank you all, and goodbye.